All right. If you made it this far, that's what's up. In this video, we are covering break and retest. This is going to be part one of break and retest, and that's what we're gonna get after a double bottom buy setup. So let's go ahead and jump on that real quick. But there's a few things I want to knock out before we go over that, which are the rules, and these are the same rules that we go over every single time before we trade, right? So let's do this real quick. Now, so we could start off of a blank, right? So we got we got 5 rules, but we got 4 up top. It's gonna be very, very simple. Okay. The rules for trading are as follow. Time frame for technical analysis, time frame for your entry, and the time frame for your stop loss. What kind of stop loss you place in? What kind of price action you taking? You place in. Okay. So rule number 1, when it comes to trading, your technical analysis itself, meaning the setup that you are looking for, the double bottom, the double top, the break and retest itself, it has to be based off a higher time frame. And these time frame has to be either the month, the week, or the day. That's from the highest to the lowest. That way we are looking at the bigger picture, we seeing the bigger move. Okay. So that's where your technical analysis will be coming from. So I'm talking about like the double tops, right? And the double bottoms, even the break and retest, right? Either for the buy or for the sell. Okay. Rule number 2 is the time frame that we are using to actually pull the trigger, to click buy or to click sell. Okay. And that time frame is going to be our 4-hour time frame. So, right, 4-hour time frame. Or, I like to say H4. Okay. Boom. All right. That's going to be the lowest time frame you will be using. Okay. So technical analysis based on the higher time frame. Once you do your technical analysis, you drop down to the 4-hour time frame where you would wait for number 3. Number 3 would be your PA, right? Which is price action. Okay. And that price action will be the engulfing bar. All right, so it will be the engulfing price action itself, either the bullish engulfing, forgot the G, but still, it's still engulfing price action, okay? The engulfing bar, either the bullish engulfing or the bearish engulfing. And rule number 4 will be your stop loss placement, okay? Your stop loss has to be at either the previous high or the previous low. So rule number 4 will be SL, right? So SL stands for stop loss, right? Either it will be placed at last low, okay? Because if you took a buy, it would be at the last low or last high, okay? Ooh, last high. All right. So these are your rules. So rule number 1, higher time frame technical analysis. Rule number 2, the time frame we use to actually pull the trigger. If you are somebody that's using the 4-hour, it will be the H4. And then within that H4, that 4-hour time itself, we'll be waiting for a PA, also known as the price action. And the price action that we trade, again, is the engulfing bar. So we would have a bullish engulfing that will look like so. Okay. Boom. A little bit of body net, right? And then we can have a bearish engulfing. Okay. Your entry for the buy. Okay. And the entry for the sell will be within here. Okay. So the engulfing bar. So that'll be your price action. And last low for the stop loss if you are taking a buy, and the last high for the stop loss if you're taking a sell. Okay. So very straight to the point. Very, very, very simple. So it's the same thing when you backtest everything that you backtest. Now, we're going to go ahead and let me pull up these setups real quick. That way you get some form of understanding as far as what I'm talking about, right? All right, so let's pull this up real quick. So we know we have our variation of setups, right? So let's go with the most common double bottom because we're going over the break and retest, right? So we got a double bottom where we have two equal bottoms. First bottom, right? Second bottom. So what we're talking about is what happened after market breaks this high point, okay? Now, since this is a double bottom, this market is coming from the top. So it will be a downtrend, right? Because I mean, it's trending down, okay? So we need a previous structure to be broken. So we're talking about the retest point after market goes up, breaks the previous high, to be more specific, low high. So these will be lower lows, okay? Okay. And these will be low highs, all right? Once that low high is broken, you know, we want to know where would be the area where we enter for all buys, okay? That's basically what we are going to cover. And the rules that goes with that, okay? So let's go ahead and jump into that real quick. Okay. Where are we? Okay. So when it comes to a break and retest, especially for a buy, right? So let's go ahead and generate a downtrend first, right? Where we get in lower lows and lower highs, okay? Boom. Now, when we get in a break and reset, also known as a trend reversal, where the market's coming from a downtrend and then to transition into an uptrend, right? So we know, okay, that a downtrend, a selling market or a bearish market will give you lower lows where each low, okay, is lower than the previous low, right? And of course, after each low, you get a high, not just any high, you get a low high. Why? Because each high is getting lower than the previous high. Now, to get a trend reversal, right? To get a trend reversal in a bearish market, right? That's going to transition into a bullish market, a previous high has to be broken. Now, I want to make this very, very clear, okay? If you are going to take a buy in the market, right? And it's a sell market, for you to take a buy, you need a previous high to be broken as far as the trend reversal aspect, right? We know we get the first double bottom, which is a 50-50 trade, right? Now, the trend reversal, a previous high has to be broken. Let me explain to you what I mean by that. Now, we know we have a bearish trend. Okay, we could put a trend line if we want, right? I'll run it with this one. We match in the next structure point, right? What I'm talking about is, and also each high or low point is a turnaround point. So let's just put a zone because that's where it stopped at, right? Remember, it stops here to fall because it was coming back to this, right? Just like vice versa. All right. I don't want to overwhelm you guys with that. I just want to make sure you understand just this point. For us to get that trend reversal, we need the market to do like so, right? We need it to go up. We need it to go up to break this previous high point, okay? The high has to be broken, okay? Once it breaks the high, we will wait for the pullback, the retrace. That's why it's called a break and retest. So we're waiting for the retest. Now, when it comes to the retest itself, there's more than one area that it could retest to, right? We have the first one, which is here, the second one, which is here, and then the last one, which is down there. But the first thing that we need is a break of a previous high. So again, to get a trend reversal, right, to get a break retest, a trend reversal from a selling market to a buyer market, a previous high has to be broken. to be more specific, a low high. So now when market breaks this structure point here, right? So notice it comes to this zone, stops within this point. Now we're gonna wait for it to come back, right? So the moment the market starts coming back, we are now with a higher high. What I mean by that is market stops here and start coming down. Okay. We don't know exactly yet where it's going to stop at, but we know it stops there. So at this point, this will be considered as a higher high because this high point is higher than the previous high. Okay. That's a higher high. So when market comes to the structure point, which is here, that's the first one, we will wait for PA or price action. To be more specific, we would be waiting for a bullish. Okay. One of a bullish price action. Okay. One of a bullish PA. Right. Now, if we don't get that and it continue down, this right here, that's the next zone. We'll be waiting for the market to come to this point. Once it gets to this point, again, we are just simply waiting for a bullish PA, a price action. Okay, let me change the color real quick with that. Yeah, let me do something like this real quick. One more. Yeah, so change this. Let's make this white. So it stops here or it could come to here. Okay. And then let's make the next one. We could go with yellow, right? Or it could come to this one. So either one, right? So once market come to any of the locations, either this one, all right, that one, or this one, we'll wait for our price action. We just simply wait for a bullish engulfing to take our buy to go to the upside. Please understand, this trend reversal is a setup that you are waiting for in a higher time frame, month, week, and day. Now, it just happened to be when you go to your 4-hour time frame, which is the 4-hour time frame that you're going to use to actually pull the trigger. A lot of time you will get the same trend reversal in there. So remember, trend reversals typically happen in a lower time frame first, but we're looking at it off the 4 hours. So the zone is going to be the same. So when we have the zone, which is the daily time frame zone or the weekly or the monthly, we drop down to the 4 hour. This is the type of retest we're looking for. So again, let me clean this up again, right? We're waiting for a pullback to any of these points, okay? Any of these points. Let's do a check mark, right? Either here, here, or up there, okay? So that's what we're going to cover today. There's different variations of this. So what we're going to do is we're going to do at least 3 to 4 10-minute videos. That way it's a lot easier for you to consume and not be overwhelmed with all this information. Especially, I don't want you to be sitting there for way too long. Okay? So let's just go ahead and work with the very first one, right? So different variations. So it doesn't matter in what order you go with it, right? We could just use this one right here real quick. This will be the first one right here, okay? So we see that the market is in a downtrend, right? It's a bearish trend. Now, when market is selling, it's going to give you lower lows and lower highs. So let's go ahead and mark these real quick. Market sells, so a selling market, right, or bearish trend will give you lower lows and low highs. So these will be all low points, okay? All right, boom. And then we get low highs, right? All right, here we go. Lower highs. Boom. All right. Now, before we get that trend reversal, as you can see, market typically give us some form of a double bottom of some sorts, right? See here, it stops here, went up, it went up, boom, went back down there. We got a double bottom, 2 candle price action where we got 2 blue candles that engulfed the last selling candle. Okay, I think the color came out of it, but there we go. Yeah, right. So we know market give you a double bottom, right? 1, 2. right? And then it went above, as you can see, broke the previous structure point to give you a new high point. Now, this new high point is a higher high, right? Now, after the higher high, we're going to wait for the market to come back down to give us a higher low. Why? Because this lower low here is the same thing. So it continue. That's the same lower low, right? When market goes up to give you a higher high, when it comes back down to give you that pullback to retest, this right here will be considered as a higher low. Why? Because it is higher than the previous low. Okay. So with a trend reversal, a previous high has to be broken. To be more specific, a previous lower high has to be broken. Now, when it comes to taking the buy, right, your entry will be at a high low, right? So that'll be the pullback. Okay. So I'm just going to draw it out for you real quick. So we got lower lows, right? Boom. Once it breaks a previous high, which would be right here. Okay. When it comes down at any moment in time, once it gives us a bullish engulfing, we'll take our buy for it to continue up. Okay. So from lower lows to a higher low, from lower high to a higher high. All right. That's the transition. Okay. I know there's a lot more information in there, but that's pretty much what's happening. Now, not all the time you're going to get a double bottom that's just equal. Sometimes it will look like so. All right. That's why I'm showing you the first variation where we have a clean double bottom followed by a break of previous structure high where it came back to give you that retest point. Now, after they give you that retest point, as you can see, we had a one candle bullish engulfing, right? Which is that bullish engulfing right there. Now, after you got that bullish engulfing, market did not buy right away. Instead, it gives you a bearish candle, right? So it kind of sat there for an additional 4 hour. And then after that, within here, wait, let me do this real quick. After that, it started buying up. Okay. Let's go ahead and generate that real quick, right? After that, it started buying up. Okay. Like so. All right. So your entry would have been within this point right here. All right. Since your entry would be at that point, we look at the last low for a stop loss. And that right there from this double bottom here will be the last low. So you take the entry here. That's your entry. And your stop loss, aka your SL, would be down here. Okay. Entry, stop loss. Okay. Very simple. All right. Last low, good to go. All right. So that would be the first variation when it comes to a break and retest. Now, with this break and retest, you got an equal double bottom first, where sometimes it will look like so. So, of course, we're gonna target that a little bit. We're gonna show you some other ones where we got more of a range or a wedge. Okay, it's gonna be nice, easy work. All right, easy to understand, easy to work with. Now, let's see. Give me one quick sec. All right, boom. All right, another example of a trend reversal. Okay, so this one right here, we're gonna cover that. We're gonna cover this trend reversal on the next video again because I don't want the videos to be way too long. All right, so this is just gonna be part 2. Okay, let me make this a bit bigger. All right, part 2.